Good evening, and welcome to the second of three financial security programs for Knights of Columbus insurance members, their friends, and their families. Our financial security has been challenged by the pandemic, and these engaging and educational live events will help you regain some of that security and peace of mind. My name is Sonny Sanjmino, and I'm a Knights of Columbus General Agent in Ontario, as well as the Canadian Agency Executive Consultant for the Order. Before we get started tonight, I just want to do a little bit of general housekeeping just to make sure everyone understands how tonight will proceed. So what we're going to be doing, we'll be introducing our speaker very shortly, Jim Ruta, and I'll do an introduction. But I want to draw to your attention on the screen that there's a couple of buttons on the bottom of the screen. One that is marked Q&A. That is where if you have a question for Jim, we're going to be keeping everyone muted. If you could just type it in there, we've got Gilles there forwarding all the questions basically to answer the simple ones, and then the real juicy ones we're going to kick back to Jim at the end of the evening. On top of that, you've got the chat button, and that's if you want to, say where you're from, say hello to everybody. You could just do a quick little chat using the chat button, and we will be having a questions and answers session at the end. I also will draw your attention to the chat box. Open it up, because throughout the evening, we're going to be sending you an invitation to our main event, which is going to be how to avoid essential financial insecurity during a pandemic, which is our main 1 hour talk, which will be offered in April. So you have to register. We're going to be offering 2 sessions, which will be pretty similar. It's basically the same material twice, but we do ask you to register because it will be difficult to get a spot in that presentation. So without any further ado, I'd like to introduce our speaker, my friend and life insurance expert, Jim Ruta, for our second client event, which tonight is life insurance beneficiary mistakes and how to prevent them. Today, we have a very practical discussion about how to make the best use of your life insurance and not to leave any surprises at the worst possible time. Now, a little bit about Jim. Jim has a deep understanding of Canadian insurance and retirement funding strategies. He was a successful life insurance advisor and executive manager of one of Canada's largest insurance agencies. Jim is also a well-known advisor, coach, and best-selling author of books like Master Your Money Management and Don't Worry, Retire Happy. He is also a faculty member of the Canadian Initiative for Elder Planning Studies and is the Canadian ambassador for the life insurance educational nonprofit lifehappens.org. Well, welcome, Jim.
Thanks, Sonny. It's great to be with you and my brothers in the order from across the country.
Well, you actually bring up a good point. That's one thing I didn't mention, that Jim is also a brother knight in Hamilton, Ontario. So very proudly as well.
Amen.
So Jim, let's get right into it. Life insurance beneficiaries seems like a pretty simple topic, something we all take for granted. Don't beneficiaries just take care of themselves? And really, how do people get these wrong?
Yeah, you wouldn't think it'd be possible, but you know what? We hardly ever look at our life insurance policies after we buy them. Maybe we never do, in fact. Often we just put them in a drawer or a file cabinet, and then it's a matter of out of sight, out of mind, that sort of thing. After all, life insurance really is the largest unmanaged asset anyone ever has. So life insurance is an uncomfortable topic for many people to think about, so we don't think about it. And we don't. And whether we don't like to think about it and we don't realize how that goes. But unfortunately, that reticence to check on policies can really be a big mistake. And that's why you want your field agent to review your policy portfolio regularly, and often maybe even every single year. And this review includes every financial instrument that you own or that has a beneficiary attached to it, especially like group insurance benefits, RRSPs, and even TFSAs. A great deal can happen in a year. Boy, the last year is a perfect example of that, isn't it, Sonny? And if you don't adjust your beneficiary designations regularly, you'll regret it even long after you're gone. Sonny?
Absolutely. Okay, so that seems pretty simple. Have regular reviews. Your agents are probably best served and best educated on how to avoid most of the most common issues. But how do we make sure we don't make any beneficiary mistakes?
Well, I think, look, reviewing your life insurance policy portfolio with your field agent every year, especially considering your beneficiary designations, which we'll talk about in some more detail, obviously, can pay big dividends for you and for your family. We hope that the insurance that we have will leave more financial security and increase our peace of mind. And remember, peace of mind really equals quality of life. I got that. I love that part of the Mass, where, we offer the sign of peace to everyone around us. If you realize after a while, as you get to my advanced age, not your young ages, but at my age, you realize just how important that peace is. So you can avoid many mistakes of commission and omission that will have the opposite effect of what you hope your insurance will do. Less financial security and peace of mind, but it doesn't have to be that way. If you haven't reviewed your policies for the beneficiary designations in the past, say, 3 to 5 years, well, here's why you want to make those arrangements with a competent agent at your earliest convenience. Remember, legal capacity it has an unknown expiry date. Your ability to change your beneficiary designations, in fact, actually goes away at one point. One day we could make the right changes, and the next day we can't. Time really is of the essence in that matter. So that's how we want to do that, Sonny.
Excellent. So if you had to choose out of all the particular mistakes that you've encountered over your time in the field, what was the biggest mistake and how can you avoid it?
Well, Sonny, it's a great question. And I've seen this happen a number of times. And I think the biggest issue here is that you could unintentionally disinherit a child or a grandchild or somebody else, in fact, and create generational family disharmony. This has got to be like the worst possible option here. Children are born, children are adopted. But if our beneficiary designations don't grow along with our families as they grow, some of these important people can be excluded from the share of your life insurance estate that you wanted them to have. So is the family disharmony that this is most certainly to cause what you had in mind when you bought your policy? You just go in and just like throw a bomb into the family. Is that what you had? No, probably not. So checking the policy itself will show what you had in mind initially. Now, you may have to check with the insurance company, whoever that is, to be sure in the event you made a change years ago and forgot what it is. And many people really are like that. That's why this can be so useful. We just don't remember what we thought about 15 years ago, 10 years ago, gosh, 2 years ago sometimes. But there's a flip side to this thing, Sonny, that really can cause all kinds of grief. And that's mistakenly inheriting somebody you wanted to exclude. Like a former business partner, a former spouse, and even dead people. It absolutely happens that your life changes and some of the people that you initially wanted to include fall out of that included category. Spouses of divorced children, a former or deceased spouse, family members who have passed away, and business partners of businesses that we no longer have are good examples of beneficiaries we do not want to have designated. And Sonny, those two are the two massive ones, the biggest ones I think of, but there are more.
Well, listen, you bring up a very good point. I've been to a lot of funerals throughout my career, and professionally and privately. And at some of the most difficult times, people are at the highest strains. Things are frenetic. So that's the one thing you want to make sure is that the paperwork is correct. Because God forbid, like you said, it's at the worst possible time and you can't correct these mistakes. But let me ask you a question. Life insurance, for the most part, in most situations, is 100% a tax-free benefit. Are there mistakes that an insured could do or a policy owner could do that would potentially put their tax-free benefits at risk?
Yeah, you wouldn't think that would be a thing, but in fact, you can add sort of so-called tax to even tax-free benefits. And Sonny, let me explain what I mean. If you make the estate the beneficiary of your policies, you will end up paying more tax and cost than necessary and making all your wishes public knowledge to boot. Now, this is especially regrettable if you don't have a will to direct the money. Some people, when they're doing this sort of thing, really don't know what to do with their life insurance beneficiaries and default to an estate designation. They say, oh, well, just leave it to the estate and let them figure it out. Now, in most jurisdictions, and certainly here in Ontario, but everywhere across Canada, I'm quite certain, this means that the otherwise tax-free life insurance payout becomes subject to probate tax, which can be a factor, frankly, in larger estates. Now, it's not a ton of money, 3% perhaps, 1.5%, 3%. It varies in occasion. Let's see, even 1.5, but on $2 or $3 million, all of a sudden it becomes more than pocket change. Now, in addition, when your executor or your estate trustee with a will in lots of jurisdictions now in Canada has to handle the money, they are able to add an additional charge to the estate. That means they can take a piece of it too. So that's more tax, so to speak, that is not exactly necessary, and all because of a particular beneficiary designation that you can correct right now. So why pay extra to the government when you don't have to? And one last thing I think that's important to remember, I just thought of something else that's interesting. In Ontario, that tax is called the estate administration tax. The probate fee is estate administration tax, the EAT. It always thought those are an outstanding acronym. It just eats away at your estate. But one last thing, when an estate is probated, your beneficiaries and amounts paid to them become public knowledge. Now, is that what you had in mind in the first place, that your final money matters would be public? Now, Sonny, this is one of those things that you can fix, and you don't have to have any tax-like monies paid off to the government.
That's interesting, because I've had a lot of conversations with clients, and sometimes they're very private, and they want to make sure that it is a very private transaction. And the nice thing about a properly worded beneficiary designation is that no one knows what they're getting except the beneficiary and the insurance company. Let's talk about the other thing I wanted to ask you about. What about estate freezes? Is there, that can be a really big issue. We encounter occasionally, money that does have to go through probate, and that money is essentially stuck in the process until it's released under a certificate of clearance. Isn't that correct?
Yes. Yeah. Look, there's the other problem, of course, with how long. Now, when you say estate freeze, you had me in a cold sweat, because that tends to be a business situation. But I know what you're talking about, because, sometimes these estates can take a year, 2 years to get that final tax clearance from the Canada Revenue Agency. And, that means, like, is there somebody at Canada Revenue you're so in love with, you want them to hang on to your money for the next 2 years? Because that can happen there. But as you pointed out a minute ago, you can have this money go directly to your beneficiary. You can pay anybody. Anybody can be a beneficiary, and you can decide. So if you're a private person, it's a real big deal, Sonny.
Excellent. Now, many of us are family individuals. We want to look after our kids, our grandkids. Are there any mistakes regarding inheritance towards children and grandchildren?
Well, there surely can be. And a lot of us have younger children, and if you have your younger grandchildren, but certainly younger children in particular. And, not providing the proper trustee for minor children beneficiaries or having your will handle it properly can be a really big mistake. Not having a trustee for minor children, which can happen on a policy, can mean that the government, in this case, often places called the Office of the Public Trustee, and doesn't that sound like a friendly, kind of warm and cuddly place to be, might get involved with handling the money for your young children if the very worst happens. So here's the question, do you really want your executor to have to apply? And this happens. Do you really want them to have to apply to the public trustee to settle the amount of money the kids are going to get and how they get it and when they get it? Is that something that you really want? Do you think that this will be as expedient as you would want in this most difficult situation for them, for a spouse remaining, etc.? And what if the simple trustee that you did designate is no longer suitable or available to do that job? Well, what then? What if your minor children are no longer minor children? What happens with that? Do you suppose the estate, the insurance company, or your children need that complication? And to your point earlier on about, things and delays and the way things go on, we want this stuff to happen. Look, Nobody wants to die. That's that old story. Everybody wants to go to heaven, but nobody wants to die. But we don't want this to. But if when that happens, we would hope for smoothness in all this process. So, you can make that smooth by working with your field agent and making the corrections if that happens to be part of that. Now, there's another part to this that's really even maybe more important, and that's about not providing for special needs children, specially. Now, some of our children, and God bless them, have identifiable special needs and need special financial arrangements for the care they would need if they were to be left out on their own. And of course, that happens. I was working with one of my advisor clients recently, just this week, in fact, and there was a case where a high-performing autistic child required hundreds of thousands of dollars per year. Now, this is a very wealthy family, but there was hundreds of thousands of dollars per year to take care of that child. And in fact, now the family is insuring that need. You see, not making arrangements like that and funding them with life insurance could mean leaving your most vulnerable beneficiary in a very precarious position. And it's really the worst possible option, isn't it? It's the last thing we would want to do. But with your kids, we don't want that to happen. And there's lots of other ways of dealing and helping those children too. And your field agent absolutely can help you avoid that most regrettable outcome. Sonny?
So I'm thinking right now, so we take a large amount of time discussing people's needs and their desires when we're doing a new policy. But what about old policies? Old policies, are there any potential old mistakes or industry norms that have changed that can come back to haunt us?
It's funny, it's funny. Even as I was researching this topic at one point a while back, I thought, geez, this can't be that complicated. And then you realize there's all kinds of little niggly things that can happen. And, we judge, things we did 30 years ago by today's rules, and things get goofy. And one of the goofy things really is in the end of the day, we designated dollar amounts from policies for beneficiaries. So time was that agents would break up an insurance beneficiary with the beneficiary designations, shares at least, by dollar amounts. So, for example, if you had a $250,000 contract, a $250,000 policy, and you had 5 beneficiaries, then each policy would be named for $50,000 each. Now, I know this happened because I started 43 years ago. That's exactly what we did. We were told to do that. But now, obviously, a lot of those people I sold policies to going back even 40 years ago, still around. Now, this is an old approach that could exist on some of those older contracts, but it can cause trouble and unnecessary delays paying out on old policies because death benefits might be a little different than the face amount due to dividends maybe have been paid, additional insurance options, or loans, for instance. So now it's not $250,000, it's 270,000, for instance, or 230,000. And if it's 230, then what? Today, we would name the 5 beneficiaries, Betty, Sue, Jane, we would go through all of that and then say 20% each. So 1/5 each. And that way we solve that problem. But it's an example of an old problem that can really come back to haunt you, Sonny.
On that subject, I see a lot of times too, it was very common to name a spouse, but not a contingent beneficiary. Can you talk a little bit about contingent beneficiaries and why they're so important?
And of course, you would have to bring up something I don't even think about, but you're exactly right. That's a perfect example. If a spouse were to pass, and it's a sad look. My first wife did pass, so I understand that situation. But here's the point: is that if you don't have a contingent beneficiary, then automatically your beneficiary becomes your estate. Now, you might have left your wife $1 million, your husband $1 million, $2 million, $3 million. But without a contingent beneficiary, and if you haven't reviewed that recently, what happens? Automatically, it's your state. Automatically, we just revert to one of those earlier points I brought up, where now you're dealing with paying probate fees, the EAT tax, so to speak, and making everything public. It's a great point, Sonny. I'll have to write that one down and add it to the list.
No problem. Now, one thing I do want to just sort of clarify, Jim is 100% correct. Knights of Columbus being a fraternal benefit organization, we do also have a 71.2 subsection. All it means is that we have a hierarchy, but I have seen where we leave that to follow that hierarchy to your children, to your spouse, to your siblings, to your parents. It can inadvertently make people you don't want to be your beneficiary as well. So I always say, even though we have that as a catch-all, it often puts us in a very difficult situation, especially if it's registered money, RSPs, RIFs, pensions, and now it's going to an individual rather than the estate, and the taxes are going to the estate.
And Sonny, there's really another point here, and I'm really trying to. What I'm saying is, your field agent, even though we're with the Knights of Columbus, this does not mean that we can't look at a policy from an Equitable Life, from a Canada Life, from a Sun Life, and we can provide advice on some of those things. And I think there's where you can provide real value to our members and to the council members across this country, is by doing a service, not just being sort of restricted to the little box of stuff that we do, but how big is the entire box? How big is all of it? Consider all of that and help them, because not everybody has that necessary hierarchy either, and they don't.
You're 100%. And I know a lot of times when we're having these conversations, we get into larger conversations about wills, trusts, powers of attorney, all those things. Well, speaking about, you talked about, special needs. Are there special beneficiary designations to help out those in special circumstances?
Yeah. And look, this is a big deal. And I think a lot of people don't even know this. There was a company in Canada a number of years ago, made a big spill on this. They were marketing all over to talk about settlement options for your beneficiary payments. And this is really a big deal. And you may absolutely want to do this, because one of the big mistakes is not using settlement options for your beneficiary designations or payments on beneficiaries. Now, think about this. Are there some beneficiaries that, especially when adult but still young, could not handle a large payout of cash all at once? Would you really want your 22-year-old, technically an adult in every single way in this country, in every single province, handling $1 million or $2 million or $3 million? So you see, at that point, you'd say, oh, well, I don't think so. Wouldn't it be nice to be able to pay that out in some fashion? Now, supposing, of course, there's nobody else to manage the money and not a spouse or someone else. But in this case, you could say that you can, well, first of all, you can control how that money is paid out. As a beneficiary designation, by using those settlement options. So that's predetermining, sort of like reaching back from the grave and controlling how the money is handled. And it's really a valuable tool in lots of situations, whether it could be a spendthrift spouse, it could be a spendthrift child. There's lots of ways of controlling that, so you can make sure you're creating family harmony and you're creating peace of mind, and not just sort of getting money and then someone goes out and there's always a joke in the business that, if my son inherits all this money, the first thing he's going to buy is a Lamborghini, and then what are we going to do? So a large amount of money for a lot of people could ruin some of them, and not be the benefit that we really hope it to be. So a field agent can help you do that. There are also some other areas here that I think are important, and that is some disability insurance policies, certainly with lots of companies, and even long-term care contracts. Other policies of all descriptions often have death benefits attached to them. So when the disability is stopped, there's a death benefit payment. So not naming a beneficiary or having the wrong name there can disadvantage people that matter the most at exactly the worst time. And it's another one of those things that you can fix. And I think really one of the things that I also want to bring up here too is that, sometimes we forget to include the charitable causes that we have supported all of our lives and that really matter to you. Sometimes the reasons that we have life insurance change, and we have a policy that we that doesn't really have to be paid to the beneficiary we originally intended. That means that the money that from that policy could go to a favorite cause, which can then mean a wonderful legacy and a tax credit to the estate. It could really make your name live on for a very long time after you're gone. And your agent and a lawyer, probably in this case, can happen. There are also some really cute ways of dealing with that, even having charities taking some of this stuff over, but that's a topic for another day. Sonny?
Yeah, so I get how beneficiary designations are so important, and I'm hoping that a lot of our participants today are also picking up on that. Are there ways that a will can get in the way? Can a will sort of mess up the situation if it's not handled properly?
You know, Sonny, this is a great question because a number of years ago, I think it might have been 10 or so, we started to see things like that you couldn't just submit a death claim and get paid by some carriers. Some insurance companies wouldn't pay on the basis of simply a beneficiary designation, the last recorded designation, and that's how they pay. They wouldn't do that. We want a copy of the will. And I can remember agents going, "What? Why would you? What are you talking about? Why would that be a thing?" You know, but here's the deal: inconsistency between policies and the beneficiary designations in wills can really make a difference. So sometimes we see wills directing the proceeds of an insurance policy in spite of anything else, in spite of how it's going. Whatever says there, they'll say that the will take precedence over that. So that sort of confusion can really mean delays and expenses that you don't want to pay, among other things. This is why today many insurance companies will not pay out the life insurance proceeds without getting a copy of the will. And that's just the way it is. And you could say, well, it shouldn't be, or just the way it is. So if you want a smooth payout of proceeds to the people that matter to you, you would be wise then to be sure that your will and your policies are properly aligned so it all makes sense. And your agents can help with the policies, again, regardless of the company. And I absolutely encourage you to get that done with your field agent. Sonny?
And what can we do to make sure that there are no surprises? So to try to take all those surprises off the table, maintain that family harmony that you mentioned, and so that we get the last word the way we want it. Well, how do we do that? How do we ensure this?
Well, you know what? I think there is a way, and I think this is where your field agent can really excel. It can really be a star in your life. And you know, you can't be a hero to everybody, but you can really be a hero for this one thing. You know, and I think one of the ways and one of the problems is we don't keep a separate record of the designations and the values of those designations for the beneficiaries that we want. But your field agent can sit down with you, and then it can help you plan the estate and compile your beneficiary designations and their value for you. So you have a list. You may have policies, but you'll also have a list that could absolutely be very beneficial to you. And so you don't have to wonder. Look, Sonny, I admit this. I pay $45,000 a year in life insurance premiums. I have, I don't know, a little vault full of the darn things. There's probably 15 or 20 of them in there. I don't remember what's in there, but isn't it great though, when I can look at that sheet and go, here's the list, here's the date they were done, and I know what's current and what's not. You know, that really is a big way to do it. And this way, you do know what you've got and why you have it. You know, Sonny, just to finish us up, I know we're running out of time, but, you know, ultimately, the solution to all beneficiary mistakes is to ask for or to accept the offer of an annual policy and or beneficiary review from your field agent so that you have the opportunity to reconsider your decisions about your life insurance proceeds and then adjust or update them as you feel necessary. But please, remember this, is that you need to make these changes while you still can. And, you know, if the pandemic and the never-ending pandemic, wave 3 of how many, we don't know. But if it's taught us anything, it's that life is very uncertain and very unpredictable. To make beneficiary changes, as I said before, you must have the technical, legal capacity to do that. Once you lose that legal capacity, you cannot change beneficiary designations. Not even your power of attorney can make that change. They are fixed forever. And that may absolutely be not what you want. So you want to confirm that with your lawyer and work with your field agent to make sure that you've got the right stuff. Look, something else you do with these beneficiary things, say, look, you get all these contracts out and say, wait a minute, is this all there is? maybe we need to do something more. That beneficiary audit, appraisal, review gives you the opportunity to update your program so that you get what you want. Your family does this. And so use your field agent to help you review your life insurance policy portfolio so you never make a mistake with your beneficiaries and your beneficiary designations. It's a regrettable trouble that no one really ever needs. Sonny?
That's excellent, Jim. Thank you very much. I really appreciate everything you've covered. Before we get to the question, I just want to say, any last thoughts, any sort of closing words you'd like to share with the guys before we go to questions?
Well, I would just say this. Look, one of the things that you should count on your field agent to do is to be more worried about you than that person that he is about himself. And I think this is why I think what we have that, and the brothers that I know that are in the that are field agents that work with you and work across this country are people who really take it from the heart. They want to help their clients. They want to help their members, their council members, do what's right for themselves and their families. And I think we start with that, and we realize that this is an opportunity to protect those things that really matter to us. And your field agent can really deliver for you in that regard. So, you get that peace of mind, like I said before, that really is quality of life.
That's excellent. Thanks very much, Jim. We're going to ask Gilles to unmute. Gilles' been manning the questions and answers. And Gilles, the floor is all yours.
Thanks. Great job, Jim. We appreciate you being here. Just got a few questions here that we picked up. You actually added 4 or 5 of them. You did a really great job of answering most of them along the way. So it eliminated some questions and answers there for sure. But one of the questions we have here is, can we give specific instructions on the purpose of the death benefit for special needs kids in the policy, or do we absolutely need a will for that?
No, that would be a will designation. Now, look, I'm not a lawyer, and this is not legal advice, but to the best of my understanding, and I do work with a lot of estate lawyers over the years and have done that, that is a legal responsibility, and you want to direct that. So you can say the money is left to a trustee on behalf of a special needs child, and then the lawyer directs. There's lots of things involved here you want to be involved with too. When you have special needs children, it's more important than ever to have that will, Gilles, and get that done properly. So the life insurance generates the cash. The beneficiary sort of directs the money, but the will direct how that money is to be spent. Very important question. Great question.
Okay, appreciate that. Great answer. And another question we had, it's more about death benefit and taxable, but while everything seems to be taxable these days, how is it that death benefits are tax-free?
Well, look, it's interesting you asked that question because I was just talking to my good friend Mark Halpern about this. And, I said, look, there's the final 4. He says, in Canada, until next week, I suppose, until the federal budget comes out, the final 4 in terms of tax-free investments in this country, the final 4. Number 1, principal residence. Number 2, lottery winnings. Number 3, TFSA. Number 4, life insurance. That's all we got. Only 4. There's not many places that are tax-free. It just happens to be part of the final 4. This is what's left. My guess is, by the way, Gilles, that it's not likely any government would ever try to make this stuff taxable. Look, this happened. They tried this back. Frankly, you were probably a child at the time, but I remember 1981 when it first came out. The McKechnie budget from the Liberal government back then sort of tried to make try to tax life insurance policies, and people went berserk, and for good reason. And I'm not kidding. Nuts. The industry went nuts. Consumers went nuts. So it's not likely it'll ever happen. The one thing I think you can count on is that life insurance proceeds will stay safely untaxed, except for that probate tax stuff I talked about, for a very long time still.
Great, thank you. I appreciate that. Another question, is it possible to leave benefit to charitable causes?
Well, not only is it possible, it's, I think, really a wonderful thing to do. And it is possible. And there's lots of ways of doing this, and your field agent can direct you with this. But look, there's ways I'm thinking about. Look, you may even find you've got some, and if somebody has a question, we can talk about this afterwards, or another time. But look, you might even have a large term policy, and you're 65 years old. It was a buy-sell for a business, or it was for some purpose, and the purpose is gone. You don't want to pay the premium. Look, there are charities that will take over your policy and give you a large charitable donation for the value of your term contract and pay the premiums. That's possible. Now, you can also do that. You can buy a policy. You can make the death benefit payable to the charity and get a death benefit, get a tax credit to the estate, which could cut all kinds of taxes, maybe the back end of your RSP, the tax that exists on that. Or you can buy a policy and make them the owner immediately, and the premiums you pay are tax deductible in the current year. So there are a handful of ways of doing this. And I think this is an important way to help our churches, the diocesan, charitable organizations, that sort of thing. Absolutely, Gilles. Not only can you, I think it's something that many of us, especially as we get older, probably want to give some thought to.
If I could just interject here, Gilles, we have one question in the list, and thank you very much. Just want to remind everybody that some of our questions in the question list are very private or very specific. And as Jim has mentioned several times, sometimes this isn't the best forum for it. Maybe it's best to talk to your agent privately. But I did want to talk on 2 points. The first is someone put in that I understand that sometimes charities, when you get a policy with a charity as the owner, they can become pretty aggressive. If they are the owner of the policy, then there's certain obligations. But a lot of people won't name the charity as the owner. They will retain ownership. They name the charity the beneficiary, so they get the biggest bang for their buck. If that's the case, you own the entirety of the policy and you can't be pushed around by a charity. And I just want to clarify one other question. Knights of Columbus is its own insurance company. The only products that we provide that are not administered but owned by the Knights of Columbus are our long-term care and our disability. Those are administered by companies that are specialists, but it is still our product, our pooled money, our pooled actuarial experience. It is all, for all intents and purposes, our product. So when you deal with the Knights of Columbus, you're dealing with your fraternity that's over 135.
And it's more than that, Sonny, obviously, and as everyone knows, Knights of Columbus is arguably the most financially secure, strong, stable company in the entire continent, on the entire continent. It is arguably the number one company in that regard. And that's, I think that's important to note. And with respect to the charitable stuff, look, I think if you got a charity that's pushing for you to die soon or to take, these are not charities we want to play with. And that's the point. This is something you can do for the people that matter to you and that play the way you want to play. And that's really the point. You have that choice and you can do what you like.
Excellent. Back to you, Gilles.
Okay, we're good. Thanks. Appreciate it.
Terrific.
So I just want to take a moment to thank Jim for joining us tonight. As always, he's very informative, very educational and entertaining. I want to remind people that there is an opportunity to see more. If you go to the chat box right now, we're going to put it up one more time. We're having a 1-hour session. This is just a little taste of what you will get at Jim's presentation on April 21st at 7 p.m. Eastern Time. We have a registration link that's being put in the chat box right now. And we have another session that is for our Western brothers, or for those who are a little bit more of a night owl, April 28th at 7 p.m. Mountain Time. So again, those will be dealing with how to avoid essential financial insecurity during a pandemic, how that you can make certain changes, very significant, but very common sense changes to your situation to take away those items. So again, please take the initiative, click that button, click the link, register, invite your friends and family. If you enjoyed your evening tonight, if you picked up any little kernels of wisdom, please share that, invite your friends and family. We'd love to have a packed house. And again, we always want to welcome you to contact your Knights of Columbus field agent or general agent to get more answers that are specific to your needs. Jim, thank you as always. Awesome job.
Thank you very much, Sonny. God bless you all. Take care, brothers.
Thank you all.